Hey, what's good, guys? What is happening? All right, at request, people have been asking for a video on the TDI itself. Now, the TDI is the Traders Dynamic Index, which is an indicator that is discussed on the Traders Reality streams. Now, what you need to understand about this, I'm going to get straight to it, guys. We're not cutting any corners. Don't need to do no long-winded introduction. Nothing like it. You're here for information. Here it is. The TDI itself is just a posh version of the RSI. All right. There are many factors that come with the TDI itself. Okay. Which is what I'm going to do in this video. I'm going to explain all the factors that you guys need to know when considering entries purely on the basis of this indicator. Now, I don't rely solely on the RSI. The RSI itself gives me an inkling as to where the movement, or should I say the volatility of the current move in the chart. Now, as a short-term day trader, I don't care about the general consensus of what is happening across the board. One way or another, price will revert back to the 50 EMA, whether it's to the upside or to the downside. Doesn't matter to me. Short-term day traders don't spend time holding positions and anticipating that price is going to get back to their entry and above. Don't want to keep the commitment like that. That's a short-term day trader. That's what scalpers do. They're in and they're out. Fast in, fast out. Now, how can you use the TDI to really exploit the moves in the market? Well, there's a problem with the TDI. All right. There's a little bit of a delay. Okay. When price makes the move, you will then see it happen on the TDI afterwards. However, we can use the TDI to really determine divergences, and we can work out volatility in the charts where we may not necessarily get the perfect entry, but we can get an overview and an understanding of what is happening with price at a certain point. All right. So first, I'm going to break down what the TDI is, each component of it, and then I'm going to give you some examples. So here we go. The TDI. Blue lines. These are like on the principle of the Bollinger Bands. It just gives you volatility. All right. When they contract and then they may expand, you're understanding that price is moving. So here's an example. You can see how price has come outside the volatility band right here. This is what we call a shark fin. All right. You can see it's an inverted shark fin. And if you go to the upside, you can see an inverted shark fin right there. Another better example would be right here. You see the inverted shark fin right there and right there. At each point in the chart, you can see that these shark fins are where price is very volatile. So for example, you can see price on this zone right here, price comes up, okay, and as it stalls, it comes back into the range, or should I say back into the volatility band. Red vector candle bringing price back down. All right. The green line itself is the RSI line, okay, and it's based on the 21 period. So if you right click on the chart and bring the indicators list up, go down to the TDI, double click. These are the values. It's 21 RSI period, volatility band 34. And these are the settings that you should really be having on the TDI setup. You can play around with these. It's up to you. You can add like a notification on there as well. It's up to you what you guys decide to do. But keep it at factory settings as such. All right. Now, the yellow line is based on the 1 hour time frame RSI. All right. So that is what we call the market base. Yeah. The red line is based on, it's a signal line. Okay. And we use this signal line to effectively determine where we are with the direction of the RSI. So we're going to look at a couple of examples. So let me start off with this move up here. Price comes up from below, outside of the market signal line, comes above the volatility band, breaks above, shows volatility, shark fin. So when you see price coming outside the volatility band, anticipate that it's going to come back into the volatility band. So when we marry that to the concept of the candlesticks, Notable volume coming in at the highs, market maker inducing the retail trader to go long so he can build his shorts at the highest possible price, funnily enough, above the 40k mark. Remember that. Market makers like to build their positions above key notable areas, and they like to do it below key notable areas. Why? Because market makers are always seeing the liquidity at whole numbers. All right, let's jump into marketing. All right, you've heard me talk about this before. When you walk into a retail store, you always see the item that they want to sell is always so close to the whole amount that they really want to sell it for. For example, $24.99. Buy now, $24.99. $13.99. It's never the full amount because the impression it makes on your mind is, well, it's not £25. It's $24.99. I'm not paying a full £25. So that margin, that small margin right there is so impressionable on the mind. All right. Yet when you see discounts, you see them in big, bold writing, and it's whole numbers. £50 off, £60 off, £1,000 off, £900 off. All right. Whole numbers have more authority, and the psychology applies exactly in the marketplace. People set orders at the 40k mark. Market makers fulfill that obligation by smashing price straight through it. They get their shorts above that zone. All the guys that placed orders above the 40k are happy days, but then the Brinks box appears, and then you effectively see the reversal. How can we use the TDI to determine that reversal? Well, simple. In context of the candlesticks themselves and the Brinks box and the zone that they are actually performing at in relation to the RSI, you can come up with confluences to improve the edge of your trade going in your favor. All right, so here we go. Price comes outside the volatility band. The RSI comes up, forms a shark fin. It stalls with this spike to the high. The Brinks box sets up. RSI starts to come back into the volatility band. You can see an M formation. Look at the chart. You can see M formation up there. All right. When price comes back into the volatility band, because if you do look closely, you can see that as it came in, it sort of tried to go back up again. Look at the market signal. Came up, but it stayed within the volatility band. Pay attention. You can see where it rolls up. You can see that, the Brinks box. So, because it hasn't done that, at that point in time, the next thing that you really want to see is the RSI break down below the market signal. Now, because of the speed of the candlestick, all right, price did come down. So your entry may have been premature. This is the problem with the RSI. You'll see the candlestick move before the actual move appears on the RSI. So by the time this candlestick had finished, the RSI did drop below down to the market signal. But that gave you inkling that they were pretty much done in this zone. So how could you exploit that? Simple. You wait to see if the RSI continues down to the next volatility band. So in essence, you wait for the move to appear on the RSI at the upside of the volatility band. And when it shows you the candlesticks, okay, you anticipate that if it comes down to the market base, if the RSI is below the market signal, then you are favoring positions to the downside. So then we look at the candlesticks themselves. We know that price is going to come back to the 50 EMA because it's expanded away from it. The red notable volume comes into play. Candlesticks recover that. Then they start to break down. This final candlestick right here pins the high and then makes the reversal. So in this zone right here, the accumulation right there was where the RSI started to, whip up and down and effectively bring the continuation down to the 50. All right. But the problem is it will only be visible on the TDI once the candlestick is closed. That's the only issue that you're going to have with the TDI. All right. Now, how can you use the TDI to effectively determine divergences? All right. Well, let's have a look. If we bring this right here, okay, you can see that as price comes down to the lows, okay, so we'll start from here, working on off these areas here. Price coming down outside the volatility band, okay? Price comes down yet again. You can see that it's back inside the volatility band, okay? And price is closing higher as it comes to the lows. The same thing happens when price comes down here as well. It's now back inside the volatility band. So you would make your entry on the second candle and ride it all the way back to the 50, okay? Because the RSI has bottomed out and effectively formed a W formation. So by the time the RSI prints, the RSI would be coming up towards the upside, and you would be in the trade, and price will be continuing. Okay? Ideally, what you want to do is you want to be getting in, all right, when price starts to stall, because then you'll be able to determine what price is doing at the RSI. It will show that candlestick, and it will print off right there. So you can see the RSI right there is flat. Okay? Comes up outside the volatility band. First time, strength. Second time, spikes the high. Okay? Stopping volume. And then price starts to break back inside the volatility band. Wait for the cross of the market signal. Red candle. By the time the red candle finishes, the RSI would have crossed the signal line. You would have made an entry, and you would have been anticipating a move back down to the market base. And ideally, the strategy itself, you want to just trade from one volatility band to the next, because you can catch this whole move to the downside. All right. Price then comes all the way back down, but it doesn't really break the volatility band as much, but it's still a shark fin. So when it does tap it ever so slightly, yes, it is volatile, but not as much as what you want to see like this. Okay. But if you look in the when you consider what's happening with the candlesticks as a whole, you can see that you've got the red candlestick, price pulls away from the 50 EMA. We are anticipating price to come back to the 50. See the green vector candle here, and then you see a batch of other green candles recovering the previous red candlesticks. Looking at the RSI, you can see the moment it crosses over the red signal line and goes over the market base, you are progressively looking for price to continue up and above the volatility band to the upside. Okay? Now look what happens here. As it makes the highs, no volatility. It's back inside the volatility band. So this move to the upside is weak. You can see divergence right there. It's ever so small. But if you see this sort of divergence, okay, where the RSI is outside the volatility band, and then as it makes a high, it's back inside the volatility band, it would look like an M formation, and that is a strong sign that they're going to bring price back down into the range. Okay? And you can see what happened. Came up, formed this high right here at the New York reversal, Brinks box, hits the New York high, and then drops outside the volatility band. Very strong move to the downside. Okay? And that is really the best way that I can explain to you the TDI itself. Let's look at price in real time on the 15-minute time frame. We can see Bitcoin now is dropping down, coming down nicely to our zone. We've been talking about this throughout the week. If Bitcoin shows a element of resistance at this point here, we are anticipating that she come back down into this area, which sits in line with the range daily low. All right, let's consider the RSI for the time being. We've got 4 minutes until the next candle. You can see that as price is dropping, the volatility on the RSI is coming in. All right, look, zoom in. You can see it right there. So there's like a W formation, or we could potentially be printing off a inverted head and shoulders on the RSI. Okay, it's come out the volatility band. RSI comes back up, comes back down, but it doesn't go outside the volatility band. All right, comes spikes up to the market base and then comes straight back down. You can see how treacherous the weekends are with the way they move price. All this spikiness in the RSI, you really just want to have these moves. Nice progressive moves to the next volatility band and then back down to the next volatility to the next. That's what you really want to be looking for. You can see the pattern here. Look, you can see rise, retrace, continuation to the upside. Yeah, there's your pattern right there. Very small version of it. Okay. So by this token now, because the RSI is still inside the volatility band, okay, price is somewhat oversold down in this range. Now, what we really want to see is if this volatility to the downside is weak, we should see a V shape appearing in this area. Okay, so what I'm going to do is I'm going to pause the video and we're going to wait and see what happens. Principally, what we want is we want the RSI to be pointing back up into the market signal line and aiming towards the market base. All right. See, with the way the RSI, the TDI works itself, it's like you would have to make the decision based on the way price is moving and get in on the anticipation that the RSI is going to continue back up. All right. So this is the only problem with it, man. There's a little bit of a lag, but you've got to be mindful of that. That's why I say don't always rely on the TDI itself as a fundamental entry exit point. But unless you hit the 1 minute time frame, which we're going to look into in a short moment, you'll understand why. So I'm going to pause the video and we'll see what happens. Okay, guys, here we go. So as you can see right now, the TDI has actually formed a shark fin, okay? But it's still within the volatility band, all right? So volatility to the downside is actually slowing down. Look what price is doing. Price is looking like it's coming back up, okay? That's what's really important about that. Now, the marketplace itself has actually closed on MT4, okay? But what I need you to understand is you can see how you can gauge from the TDI if things are starting to slow down. Now, if I bring up to you the actual chart of Bitcoin on TradingView, okay, we're going to see if Bitcoin is actually moving back into that point. So let me just bring it down for you. All right. And here we go. Look, there you have it. Bitcoin is now moving back up. All right. Now I'm sure I can actually get the TDI on. Here we go. Wonderful. There it is. So now you can see the TDI on TradingView has come back up. It's still within the volatility band. Now remember, there's different settings on the TDI on TradingView as opposed to MT4. All right. But what you can see, it is very valid what we're talking about right now. Yeah. So we can determine that when price bounces off the volatility band and it's within the volatility band, all right, as it goes to the downside, all right, you can see that they're going to start moving back or coming away from the areas of volatility. All right. So it's not necessarily divergence, but you can take it as volatility slowing down to the downside because price reverted over, come over the market signal, now working its way towards the market base. This is the 15-minute time frame. Look on here. So it does print a different one, but the principle is there for you. All right. Now, I hope that video helps you guys. All right. More importantly, I'm just going to go one more thing on here. I'm going to talk about the levels of Bitcoin right now. So look, based on the MT4 right now, Bitcoin is actually, what's going on here? Sorry. This is the zone that I've been anticipating by Bitcoin throughout the week. All right. And if it does come back into this point, so what? All right. It will be the third touch. There's no crash, guys. The people talking about a crash have never actually sat through a crash. Bitcoin crashing is if she comes back and takes this zone and just continues to go down to like the 19s and the 18s. That to me would be deemed as a crash. Price would be showing a vertical attempt to the downside. Look, something like this. This is crash-like behavior. Fast moves to the downside. But because it's in a progressive move, okay, and the fact that Bitcoin has been ranging and is still within this same zone right here. All right, guys, yeah, I know the charts are crazy, but I've got lines all over the place. Remember, I'm a short-term day trader. And when I zoom in, it looks much more clearer. But you need to understand, look, there is a zone. It's not gone to anywhere that it hasn't been to before. So where's the crash? All right? Don't fall for the hype. Don't fall for the mad talk. Apparently, YouTubers now talking about that you can't say certain words. So I'm going to be somewhat... I just need to be educated with what I say. All right? So you might see a little bit of a tamed version of Tino, but that's the story of YouTube. But hey, cool. So yeah, do you understand what I'm talking about? It's a range. They're accumulating. All right? They're getting everything below the 40K mark. Look, key notable area. 40K seems to be the psychological zone that they are wanting to build positions below it. All right? Now, I hope that helps you guys. I know I was going to talk about the 1 minute time frame, but I'll do another version of this video anyway to focus on advanced strategies of the TDI. But this is just like a basic introduction to it itself. All right? See now how price is coming back up into the market baseline itself. At this point now, we will determine whether or not in 3 minutes time that this candle is going to continue up. Is price going to break above the market base, which if it does, it will then anticipate a rise up, come back down, and then effectively go and hit the volatility band. All right? So just be mindful of that, guys. All right? Remember, don't base your entry solely on the TDI. Use it in conjunction with. So candlesticks, zones. Okay? Now, I hope you enjoyed the video, guys. If you are new to the channel, please do subscribe. Don't really ask for subscriptions, but if you can get any value of this, you know, go into the previous streams so you can marry the information together. All right. And if you want more of it, happy days. All right. Mad love and respect to all of you guys. And I will be seeing you on Sunday night. Peace.